Campbell, wealth is created over a person's lifetime through savings, through businesses, through careers and real estate and stock market investments and investing in cars and art and jewelry and all of those things. And once the wealth creation cycle is completed, and so night follows day, we turn from being accumulators to consumers because we turn that wealth into something that can produce an income, especially in retirement. So just how does a portfolio generate enough cash, and what kind of investment strategies do we need to implement to make sure we can always pay our monthly bills? Riaan Campbell, advisory partner at Citadel, joins us now to talk about this. Welcome to the show, Riaan.
Thank you, Michael.
I think what many living from the income from their assets right now, though, might be experiencing is an unexpected decline in earnings, be it from their share portfolios or their rental properties. So how should one approach bridging a shortfall in income in a time like this?
Yeah, certainly. What this COVID-19 period has shown us is if you fail to plan properly for your liquidity needs, you might just find yourself in a difficult position right now. Now, obviously, you've got to plan in the good times, but when your income strategy falls short of producing the amount of income you need to sustain your lifestyle, you've got to look around your balance sheet to find assets you can sell at a decent price. You normally look at overvalued assets or overexposed assets or even assets that doesn't produce the yield you require. So you've got to take a hard look at your whole balance sheet.
Now, what should you be considering before deciding which assets to liquidate? Because there are tax considerations and other issues. You can't just be haphazard about shelving assets that you've built a lifetime or spent a lifetime building. What are the important points to consider?
I think obviously selling assets to raise liquidity, you've got to look at the tax situation first. Capital gains tax, obviously, you've got to take a hard look at that. Sometimes you find in your portfolio small positions which have lost money where you can actually generate capital losses to offset the capital gains and make elsewhere in your portfolio. And I think most importantly is the three things that I've mentioned earlier. Any overexposed position, in other words, something that's done very well and has created a concentrated risk in your portfolio. You should look at those. Overvalued, in other words, expensive assets where you don't want to invest now. You're probably better off selling it. And then, of course, looking for assets that the yield doesn't actually produce enough income relative to the cost of those investments. And of course, collectibles like artwork, gold coins, jewelry, maybe a holiday home or an investment property that you don't.
Those are the hardest.
Need anymore. Yeah,
Riaan, those are the hardest because those are the ones you have all the emotional attachment to.
Absolutely. So you got to separate yourself from the emotional side of it and take a hard look at it. And sometimes you get to a point in your life where you actually don't need all the stuff in your life. And just to simplify makes it quite appealing to sell some of those assets that just clogs your balance sheet.
Now, ultimately, you actually don't ever want to find yourself in a position where you've got to liquidate things in order to improve or supplement your cash flow. So how do you approach that kind of cash flow planning of a financial plan so you don't find yourself in one of these situations?
Yes, I think that's the most important. What we do, we found the best way to do it is to map your future expenses, like your overseas holidays, your children's educational expenses. So once you've created a map of your expenses, you also create a map of your incomes. And where your income falls short, you then plan for assets to be sold. So if you got a holiday home and you think you're not going to need it in 5 years or 10 years' time, you actually bring it into the planning. Now, most people would also be worried that if they sell assets, they actually make a dent in their capital. But if you plan it properly, it's not such a big deal.
And that is the big issue. Planning is almost 99% of this particular game. Riaan Campbell, advisory partner at Citadel.